Welcome to the financial analysis section of this course. We'll be going through the competition of our trading strategy and also reviewing the results and the performance of our trading strategy. This is not a developer course, so if you're not a Python developer, you can follow along. But if you're a Python developer, you can also code along with us. We are not coding from scratch. We've also done the backtest and the optimization of this financial strategy. We're going to be reviewing the USDJPY on the 15 minutes time frame. So on the first step here, we're going to be importing everything we need for this financial analysis. We're going to import pandas, numpy, matplotlib, pickle, talib, and also our strategy analysis class. So I'm just going to click Shift and Tab, and that has now been imported. For our matplotlib, we are using Seaborn. This is the latest Seaborn style. And then we're going to be importing our data in the next section. We're going to be importing the USDJPY here, and we're going to be setting the index column to the time, and we're also going to be passing the time into date format. So next, we're going to add returns to our data. We're also going to be adding direction to our data, and we're also going to be adding the range as well. So the returns is basically the current divided by the previous, okay, and that log of that. The direction is simply the direction of the candle. So if it's bullish, it's going to be 1. If it's bearish, it's going to be -1. And then we're also going to add the range. Okay, the range is just the difference between the high and the low. So next, let's plot the close. Let's just do this, please add this. Then let's plot the close, okay? So this is the plot of the close prices here for USDJPY on the 15 minutes time frame. You can see this data starts from the 1st of 1st, 2021 down to 2023, okay? Current dates now. And you can see for the most parts, we had an uptrend here for USDJPY, okay? We had a downtrend here, and you can see we also have an uptrend here as well, okay? So next, we're going to be adding our indicators to the charts. And here, we're going to be using different indicators for the buy condition and also for the sell condition. So we have our fast moving average for the buy condition. We have our slow moving average for the buy condition. We have our force index average for the buy condition. And then we have our fast moving average for the sell condition. We have our slow moving average for the sell condition. And then we have our force index average for the sell condition. Now, looking at this chart up here, you can see we were in an obvious uptrend most of the time. So in order to optimize our strategy to get the best returns, we want to make sure that we have a different indicators for the buy condition and also different indicators for the sell condition. We also want to have more of buy trades than sell trades. And we also want quick sell signals. We don't want to sell at bottoms like this, and this. So we want to sell as soon as the market indicates a downtrend. So going further, we have our indicators here set up. So this is the moving average, and this is the slow moving average. And also we added parabolic SCR here. Then we have the force index, and then we have the average force index. We did the same thing for the sell condition indicators. Let me just add that now. So you can see what our data looks like. We have our time as our index. We have our open, high, low, close, tick volume. And then we have our returns, which are obviously going to use to calculate our performance. And then we have our direction. And then we have our range. And then we have our indicators here. Awesome. So now let's also plot the force index. And let us see why we used the force index here. Okay. So you can see what the first index looks like. And then let's go over to the trading strategy. Like I said in the previous lesson, for the long condition, we want the fast moving average to be greater than the slow moving average. And then for condition 2, we want the close to be greater than the parabolic SAR. And for condition 3, we want the first index average to be greater than 0. In this case here, we did not use condition 2. Now remember I said that this is an already done financial analysis. So initially we added the parabolic SAR, which is the condition 2, and the condition 5 for a sell condition. But upon the analysis, we found out that the condition 2 was causing more trades. And when we have more trades, we have more trading costs. And that led to a lot of losses, okay? Or you could probably say unnecessary trades. So we had to take out the condition 2. And in this case, we are using just the condition 1 and the condition 3. So for every candle, or at the open of every candle, we are going to run over these conditions. So for the long condition, if the fast moving average, obviously the fast moving average here, okay, is greater than the slow moving average for the buy condition, okay, and the first index average for the buy condition is greater than 0. That's for the long condition. And then for the short condition, we want to make sure that the slow moving average is greater than the fast moving average. And then the close is less than the parabolic SAR. In this case, we didn't use this condition. And then for condition 6, which is the condition 3 of the sell condition, we want to make sure that the first index average is less than 0. Now let's add the trading signal. We're going to call our trading signal position. And where condition 1 and condition 3, which is for the long condition, is true, we are going to set position as 1. Otherwise, position is 0. And for the sell condition here, where condition 4 and condition 6 are true, set position as -1. Otherwise, set position as the previous position. So in this case, position will have 3 values, either 0, 1, or -1. So let's enter that. And let's move on to the next. Now with this code here, we can see the number of positions that we have for each condition. So you can see for our position here, we have 0, 26,475 times. We have 1, 23,553 times. And we have -1, 9,015 times. So this obviously means that we're in a neutral position 26,475 times. We're in a buy position 23,553 times. And we're in a sell position 9,015 times. Now let's move over to our strategy backtest. The first thing we're going to look at here is the trading cost. And we calculate trading costs by getting the ask minus the bid. So in this case, the ask minus the bid of USDJPY is -0.01. It might be less than this, but we topped it a little bit to also account for the fees we pay during trading. Now, if you're going to be using a strategy, make sure that your trading costs is almost equal to this. If it's higher than this, then you're going to get into issues. So how we calculate trading costs, like I said earlier, is the ask minus the bid for the spread. And then we divide that spread by 2 to get the half spread. And then we set our trading costs to be equals to the half spread divided by the mean of the close prices. And you can see the close prices here, the plot of the close prices. So with that, we can get an estimate for the trading cost. So I'm just going to click that in, and you can see what our trading cost is. In this case, we are going to get a trading cost that we can use for our trading strategy. Next, we add our returns to be the returns and the position to be this position, because we want our class to understand that these values here are these values. If we use position -1 here, would indicate that here. So we've created an object from this class, gave it the data, gave it our returns, gave it our position, and our trading cost. Next, let's look at analyzing our trading strategy performance. So you're going to print the performance here, and you can see this is the strategy versus returns performance analysis. So for the cumulative returns is just what it means, okay? The cumulative returns. And a simple explanation of what that means is that if you bought a unit of USDJPY at the start of the chart, what would you have at this current time? And you can see that will be 1.335. Okay. For the cumulative strategy, we have 1.52. And this is our trading performance of our trading strategy. And you can see here that our out/underperformance, since this value isn't negative, it's positive. It means that our trading strategy outperformed our cumulative returns. So let's plot this performance on the screen. And you can see what the chart looks like. The blue line signifies our strategy, cumulative strategy, and the green line signifies our cumulative returns. And you can see how that looks. So obviously, when the trend was going down, our strategy was still performing well. When the trade was going up, our strategy was also performing well. Obviously, we had some period of drawdowns, as you can see here. But in the overall scenario, as long as the bear is trending, we would continue to make profits. Awesome. So now let's look at the signals, the buy and sell signals for 2023. And the blue arrows here signifies where we're in a buy position, and the red signals indicate where we were in a sell position. So you can see here, although it's a bit clumsy, let's try to break this down to the current month we are in, which is the 5th. So we're going to set here as 2023 of 05. Then I'm going to click on this. So you can see what our chart looks like. The green arrow here signifies the buy condition. The green arrow signifies where we held the buy position. The red arrow signifies where we held the sell position. And let's go down to plot the performance of the strategy during this period. So this was for the 5th here. And you can see we held buy position, sell position, buy position, buy position, sell position. And then we held a buy position all the way up here. So you can see what that looks like for us. We held a buy position, sell position. And as you can see, we made a bit of a loss here. And why was that? Because we held a buy position when the price went down. Okay, you can see that here. Next section here. What we did was try to use machine learning to improve our trading strategy. So I'm not going to show you this in this current lesson here, but I'm going to show you this when we're looking at other pairs like the BTC USD or the SPX 500. In this case here, it's best to leave out this strategy the way it is.